EricMother.com, October 20th, 2015. Take a look at markets here with about 4.5 hours to go before the close of this Tuesday's trading action. Let's take a look at the charts here. We're pretty much unchanged. Market's been slightly higher, slightly lower. So let's take a look at charts and see what the charts are trying to tell us. We begin by taking a look at let's take a look at the NASDAQ Daily. And number one, just here we can see that on the NASDAQ weekly, just like we discussed this past weekend, this is where the fight is going on. Can the market reclaim the level above 50 on the weekly RSI for the NASDAQ? If it can, that's good. But I want to concentrate here on the daily for the NASDAQ and just take a line connecting RSI highs. And I think if I draw it from here, there you got it. And you can see very clearly and obviously that the market is coming back to test this declining line on the NASDAQ daily. It also happens to be an area where we have the 200-day moving average. So I guess somewhere around here, we need to see what the market can do. A breakout is exactly what the bulls want to see. And so that's very clearly defined. A move above the red line is bullish. Otherwise, resistance would indicate over the next couple of days, weeks, maybe the market could pull back. Let's take a look at another, and let's take a look here at the Dow. But I want to take a look at the Dow 30 minutes, so bear with me here as I change the charts. So Dow 30, and just what I want to show you here is we've been making an improvement in the highs on the market in terms of price. But while this is taking place, you can see that the RSI on the 30-minute chart for the Dow is pointing down. That negative divergence, generally speaking, tends to indicate that a market is about to pull back, and that's still my view that we are looking at a potential for market pullback. SPX weekly, again, just like the NASDAQ, the fight is right here on the 50. And so if the market can stay above the 50 and build onto this, that's good. So in other words, if we roll over around the 50 and point down, that's going to be significantly bearish. And if we do find a way to move above that 50 level on the weekly RSI, that is going to be bullish. The best way I can show this and what this might suggest is the significance of this is, and somebody did point this out, I forget who, so if I forget your name, don't be mad, but there was a observation here on the weekly for the XLF. Let's go to the XLF. Let's go back about maybe 13 years. It's just, and as an example, I think we've gone too far. Let's go about 10 years so we can highlight some previous market action. And what I want to sensitize you to is this period here during this plunge of 2008, 2009. All this happened, as you can see here on the weekly RSI for the XLF, with the uniform action rejection at the 50. For the highs there in this area, rejection at the 50 here. For the highs somewhere there, rejection at the 50 here. For the highs somewhere here. And so you can see that if we take a line, just let me draw the line somewhere around the 50 would be my own interpretation of this. Around the 50 here, you can see, and if you spend some time studying this, you can see that right now the XLF is either going to have to find resistance here and this becomes another short-term high and we pull back, or it needs to be back above the 50. And this chart here, I just want to show you here what was taking place during the bearish periods, during these pullbacks here, when the market was in severe trouble in late 2007, early 2008, and throughout going into 2009. So that resistance is what is taking place. If you take a look at a 2-year weekly for the XLF, just like the other markets, you can see that it is actually testing this level here, which happens to be around the 50. And just like the XLF, just like the S&P 500, above the 50 is good. Resistance at the 50 is very bearish. Let's take a look at the S&P 500 daily and the daily for the SPX. We see here what's taking place, in my opinion, is more than likely is my guess that this is going to end up looking like a double top at this rate. If the market does have a couple of down days around here, that's going to be a double top, suggesting that we are back to test, or we are back to the level where the market made a high. And if that becomes a double top, my own interpretation obviously that the market is gonna have to pull back. S&P 500 on the 30-minute chart, on the hourly, hourly for the SPX, improving highs in price there. So I should draw that in green. All right, hold on a second, I got this. All right, so we have an improvement in price, which is good. But while all that is taking place, we have the prices or the RSI showing a decline in the RSI. Generally speaking, that does tend to set a situation where your markets tend to pull back at that rate. Take a look also at the 30-minute chart, just like the one for the Dow on the S&P 500. You can see this clearly. We are having this declining price action here, or RSI action, while the price recently has been showing a slight improvement. I think that setup again is suggesting that more than likely over time there's a higher chance of a pullback. Let's take a look at another sector of the market, and we go to the BTK, so the biotech space, and let's go to the monthly. As of right now, the biotech space is down for the month, just about 1%. It doesn't look that bad because it could find support going into November and find support at the 50, which would be good. But as of right now, so if we take the information in front of us, is right now we are down for the month, which means that we are pressing to fresh 3-year lows on the monthly RSI. That's not good. And also we've already seen that the MACDs already went to 3-year lows and are at 3-year lows, and also cracking below 50 on this MACD time frame. Indication there is that at this rate, this is starting to show signs of a potential break. Also here, the more this probes lower prices or lower RSI lows, the more the indication that prices are gonna have to go down. And this being a major part of the market, chances are that if this pulls back, it's gonna drag other stocks and other areas of the market with it. Let's take a look at another view, and it is the SVXY VIX derivative. And here, nice move from about 45 here to 65. But take a look at the daily, and this here goes with the trade with the in step with the market. Draw a line there, and you can see where it has been struggling here over a period of weeks, gave you these highs, and now we are coming back in what in my opinion looks like signs of a double top here. And that double top might indicate a sharp correction to test either half of this move or part of this move. Let's just call it target can be to test the lows here, or at least give back some of these gains. And I just feel that this here is another layer of indication of a market that wants to go down. Now, over the weekend I discussed Amazon as being a breakout candidate, but now there's a little bit of a problem on the chart, and it is right here. It is the fact that it is showing uniform activity rejection at 69.1. Let me repeat that. Uniform activity rejection visually at 69.1 generally tends to be a bad sign of a market. And also, if you take a look at this uniform activity rejection here, for example, during these highs, the stock did trade sideways for a while. At least it did not go higher. Now we see this uniform activity rejection, which is not a good sign. And we can also argue right now, depending on how it closes for the week, because for the week it could be positive, who knows. But this improvement in price, right? I mean, that improvement in price good on the weekly, and then we have decline RSI strength. That negative divergence again is another layer of a questionable chart. So Amazon here probably could be a short if somebody really wants to play it that way. because of that uniform rejection at the 69.1 level on the weekly. Take a look at IBM, which is down for this day, and also it is cracking to fresh weekly closing lows there below the previous weekly closing low. At this rate, that's a fresh break. A little bit worrisome if you're a market bull. Take a look at the monthly for IBM, and you can see here that the risk continues to be that it continues to record fresh monthly lows. That's not good. And also we can see that MACDs are making fresh moves to fresh 3-year lows. That's not a good sign. The last time it tried to move above zero, it was rejected there at the zero line on the other MACD setting. In other words, IBM is not looking very healthy. So if anybody looking for some short, that's an idea there. Take a look at HOG, down today significantly, also cracking below to fresh weekly closing lows below the previous weekly closing low. That's not a good sign on this instrument. And we see that on the monthly, fresh. Let me show you that. On the monthly, keep an eye on the fact that the RSI is moving below 38.2 for the first time in many months. It is also making a move to 3-year lows on the RSI on the weekly. That's very bearish. That's the worst sell or the strongest sell signal. And you can see here probing to fresh 3-year lows on one MACD setting. The other MACD setting is already at 3-year lows, and right now moving below zero. Again, another layer of a stock that is looking like it's breaking down. Take a look at Burlington, BURL. On the weekly, you can see that it is showing another rejection at the 50 line here on the weekly RSI, suggesting that right now it looks to be a short, in my opinion. Take a look at the fact that it looks like the crossover between the 13-week moving average and the 34-week moving average is about to take place. That would be bearish. Take a look at the monthly, and the monthly here, you can see that it is very early, and the stock here is showing signs of the RSI probing fresh 3-year lows, fresh all-time lows, and the MACD is about to make a fresh move to fresh lows, and also the first time trading below zero. If all that takes place, I would expect this stock to drop significantly in the coming weeks, in the coming months. Keep in mind, the stock has done well since it IPO'd here at about $17, $18, all the way trading up to 60. So even if it was to give back half of those moves, target would be here in the 30s or somewhere around there. At any rate, the more it makes fresh lows, the more this one is also going to be under severe trouble. Take a look at BABA. And what's going on, in my opinion, is this line here is being tested on the weekly, depending on whether it turns down for the week. The last time we saw rejection at that line there was during this period here. And now we are seemingly eventually at the end of the week, if we show resistance here, this is where you want to capture some short idea or some sell signal on this stock, because it has had a nice run. For the month, it is up already 22%. So maybe there's an inverse trade. Take a look at the daily chart, and man, it doesn't get any better than this in terms of an example. Take a look at this break right there. That break brought the stock off the highs in the 115 area, 112 area there. That was last year, December. Draw a line from there. It will be something like that. The last time we had uniform activity move above the line, back below it, gave you a nice high 95, and now seemingly looks like we are going to form a double top. If this is confirmed as a double top, and I need to say if, because sometimes we make a lot of assumptions as traders, we all do, but if this is going to be confirmed as double top in the next couple of days, let me say, and it points down, then that is when you want to go short somewhere here in the, let's call it 72, 71 area. So confirmation of a double top there, which would be rejection, uniform activity rejection at this level here where the stock has been struggling, let's even put it that way. That is where you want to go short. which would suggest that the stock is going to test some of this nice move, maybe half of it, maybe a third of it, maybe all of it. So Baba joins a list of stocks that to me look a little bit questionable. So consider the ideas in this video. Let's see how things go. Eric Muaded, muaded.com, October 20th, 2015. I leave you here with your market still trading unchanged. My feeling is that the market is concealing the fact that it wants to go down, and probably it wants to go down substantially. And that's just my feeling, and the charts do bear that, you know. And now I need to explain something, and I didn't want to talk about this, but I should, because it is good to talk about this stuff. So right now, let's go to the monthly. Let's go to the monthly for the. Let's take a look at the XLF. Just want to show you an example, so bear with me. I know you guys gotta go on with your day, but okay, this is a good example. So you see here for the month we are positive. This month of October is positive. Nice move higher. But what markets do sometimes, and I need to stress this, is you see this line here which is holding, that sometimes the market needs to do this so that it can break. In other words, now in the coming month and months, should it break this new line, this line of support, then that's going to be a fresh sell signal. So sometimes you need the market to set up before the next move. What I'm trying to say is, because now if we close with support on this line, if it happens with a nice positive gain, whoops, let me do that again, bear with me, that's not working very well. All right, let's draw it that way. Since we have support on this line for this month, it could be that what the market is trying to do is set the stage for a break. And so maybe this is gonna play out in the coming months, that this break is gonna be a fresh sell signal, you know. And that's the risk, that maybe the monthly charts were good this month in preparation for a break down the road. We shall see. Hope that makes sense. If not, I might try and explain this in subsequent videos, but I'll leave you there for now. Maybe we are setting up the stage for a break next month, or maybe the weekly charts eventually do change. So let's go back to the SPX weekly, not to confuse. Just watch this. Anything showing move above this 50 level is good. Otherwise, if we can't hold above that line, and I did draw a line connecting the highs on the SPX like that, anything below this line is bearish. Anything. And so there you have it. It can be confusing, but sometimes we just need as clear of a signal as possible. So again, anything below the line is bearish. Anything breaking out above this line is bullish. Right now we are seeing the market trading on the line with signs of resistance on the daily. So my suggestion for now, in my thinking, is that the market is setting still to point down. And that's been the case the last 2-3 weeks. Eric Muaded, muaded.com, as always. Good luck, peace, and blessings. Woo! ESCS.